The VYM ETF, in my opinion, is one of the best dividend growth ETFs for long-term investors compared to almost anything else across the stock market. Investing long-term into an ETF that not only has a nice starting dividend yield, but also consistent dividend increases and capital appreciation can turn a relative small amount of money into a boatload of cash later on down the road, if the investor stays invested long enough. Now in this video, we are going to do a deep dive on one of my favorite ETFs of all time, VYM, and show you exactly why it's my favorite and why you need to look into it ASAP. Then later on in this video, I'm going to show you exactly what investing just $5 per day into this ETF would look like after 10 years of investing consistently. Now stick around because we have a lot to go over. Right after you, please drop a like in this video and subscribe for more future content like this. So first things first, let's head over to the Vanguard website, which is the firm that started the VYM, or the Vanguard High Dividend Yield ETF. Now VYM's product summary is pretty straightforward. It says to seek the performance of the FTSE, the High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. Also provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields, and follows a passively managed full replication approach. Now I think it's safe to say that investors that bought into VYM at pretty much any time frame back in history, for the most part, are pretty happy with the returns that they've received so far. VYM's inception date was around November of 2006. So the ETF has been around for quite a while, which is nice because we do have a decent amount of historical performance to go off of. Now that being said, this fund, as far as share price return, not including dividends, has returned 111.92% since the fund's inception. Once again, that is not including dividends. But year to date, VYM is actually down 1.06%, so it definitely is lagging behind the overall market, which we're going to look into here in a second. But with VYM's sort of poor performance so far this year, the ETF, in my opinion, is currently a buying opportunity for a long-term investor like myself, which is why I've been grabbing some shares here and there over the past few weeks. This ETF's 52-week range is 94.59 as of the low and 113.78 as of the high. VYM has a very cheap expense ratio, the same of that as SCHD or a lot of other comparable ETFs at 0.06%, making the ETF almost free to hold on to, and definitely an expense ratio that won't eat too much into your profits. Now an important factor for this ETF is of course the holding breakdown, which is financials being the majority of the ETF, which explains why VYM's performance is sort of lagging behind as of the last year or so with everything that's been going on. Consumer defensives after that at 14%, healthcare's at 13%, industrials at 12%, energies at 10%, technologies at 10%, utilities 7%, consumer cyclical 7%, communication 3%, basic material 2%, and a tiny bit of real estate and cash. Now VYM's top 10 holdings once again sort of explain why this ETF hasn't performed all that great over this last year, although in my opinion a lot of these names, if not all these names, are for the most part very slow and steady growers that also do pay a decent starting dividend yield, so keep that in mind. But the top 10 holdings are JP Morgan as the biggest, then Johnson & Johnson, ExxonMobil, Procter & Gamble, Broadcom, the Home Depot, Chevron, Merck, abbvie, and Pepsi. VYM does have 465 different holdings, so for a more conservative, a little bit more passive investor like myself, I like to be very diversified, and with buying into shares of VYM, you're able to do so with pretty much no effort at all. Now the next thing we have to talk about is VYM's dividend and dividend growth, as well as historical performance. So this ETF is offering a trailing 12-month dividend yield of around 3.13%, so anywhere over a starting yield of 3% for an ETF that does have some growth potential as well, in my opinion, is not bad at all. Now the dividend growth rate isn't all that great. Trailing 12 months at 4.32%, the 3-year at 4%, and the 5-year at 6.08%. Lastly, the 10-year at 7.13% is a little bit better, but for me personally, I like to see a dividend growth rate at least above 5 on pretty much any time frame. But a lot of the holdings within VYM I do think should have some dividend increases coming up very soon here, which hopefully will raise up the dividend growth moving forward. The last thing to do when it comes to VYM's dividends is to look at all the dividends that have been paid out since the fund's inception, and as you see right here, it's pretty obvious that there has been some fair dividend growth involved. The last few payouts, 88 cents, the one before that was 72 cents, then 97 cents before that. If you go back just a few years, going back to, let's say, 2018 time, we're talking in the 60-cent range as a quarterly payout. So that being said, if you go back in time and look at the previous dividends that have been paid, the dividend growth is there, the dividends are getting bigger, again, not necessarily as fast as I'd wish them to, but there still is some slow and steady dividend growth that hopefully will continue long term into the future. Now lastly, I always find it interesting to stack up VYM next to some other comparable ETFs or just some other popular ETFs for dividend growth investors like myself. So if we stack up the performance next to SCHD and VU, which once again, like I said, are two other ETFs that I personally really enjoy investing into, and I'm sure a lot of you do as well, and using a total return metric, which means dividends plus share price included on multiple different time frames. The last month, we see VYM at a minus 0.33%, SCHD basically flat also, and VU actually down the most, almost 4%. The last 6 months though, VYM is basically flat, SCHD down over 1%, and VU's up 8% because of course the S&P did have a nice start of the year, relatively speaking, up until recently. Year to date though, to paint a bigger picture, VU is absolutely destroying both VYM and SCHD because of the holding makeup, and of course because of the fact that technology stocks have done so well so far this year, again up until a recent point. But stretching it out a little bit further, VYM has returned 39, almost 40% in the last 3 years. Again, this is with dividends included, where SCHD has returned 42 and VU has returned 38%. So on a 3-year time frame, almost 1,100 days now, SCHD has returned the most, then VYM, and then VU. Again, generally speaking, all these ETFs, in my opinion, are high quality, and I personally invest in all of them. But it's interesting to see on different time frames how they've performed and how they've stacked up next to each other, considering they do have some different holdings, of course. Now on the 5-year time frame, VYM has returned the least out of the 3, which still generally speaking is not bad at all in my opinion, but SCHD returned 65.62 and VU returned almost 67%. But once again, all great returns on the 5-year time frame, if you ask me. Now you saw the title of the video. We're going to go through and see exactly what investing $5 per day into the VYM ETF would look like after just 10 years of investing. So for this experiment, we have the dividend calculator set up as following. We have the distribution frequency as of quarterly, drip turned down, which means dividends will be reinvested, a $1,000 starting buy into VYM, and then $5 per day or $18.25 per year added into VYM. Now the starting dividend yield, as we saw, was 3.13%. Expected annual dividend increase, we are going off of the 10-year dividend growth rate, which is around 7. Expected annual share price around 5. Again, remember these numbers can and will change in the future, but just to give us an idea, let's see what 10 years invested would look like. So just $5 a day, or pretty much the cost that you would spend on coffee on a daily basis. This is the kind of portfolio you could build instead. A $1,000 principal starting off would earn $31.67 per year in dividends. By year number 2, just reinvesting the dividends and adding $5 a day. The investor would already almost be up to $3,000 of principal and $100 in dividends per year. By year number 3, $5,000 in principal almost, and $162 in dividends. Year number 4, $7,100 and $240 per year in dividends. By year number 5, almost $10,000 already, and $326 per year in dividends. Year number 6, $12,130 in principal and $422 per year in dividends. By year number 7, $15,000 and almost $530 per year in dividends. Year number 8, $18,000 and almost $650 in dividends. Year number 9, $21,000 and almost $800 in dividends. And by year number 10, almost $25,000 portfolio just by investing $5 per day, having drip turned on and letting the portfolio do its thing. And by that point, the portfolio was already almost up to $1,000 per year in dividends. Now for a younger investor that might have some time on their side, let's go real quick and see what the same exact strategy would look like if this investor was to stretch out the time frame to 30 years. So again, starting at year number 1, we're at $1,000 of principal, adding $5 per day, buying VYM, and basically setting this thing up and forgetting about it. By year number 15, this portfolio would be just under $48,000 and almost $2,000 per year in dividends. By year number 20, $83,000 and almost $3,800 per year in dividends. By year number 25, $139,000 in principal and almost $7,000 per year in dividends. And by year number 30, just $5 invested a day in VYM, almost $230,000 with $12,600 per year in dividends. So there we have it. There's the VYM ETF and what it would look like if an investor would just invest $5 per day into a high quality ETF like this and let the portfolio grow long term. It's honestly pretty crazy what the power of compounding can do if an investor just stays with their strategy long term. But I want to hear from you guys down below as far as your favorite long-term dividend growth ETF. Which ETF is it as of right now? Comment the ticker symbol down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.